Tesla and its CEO Elon Musk have had a rough start to 2024, with the company's stock down more than 35% this year, erasing a significant portion of the gains it saw in 2023. Currently, Tesla shares are at their lowest point since January, and the company now finds itself among the worst performers in the S&P 500, alongside another troubled giant, Boeing. So how did we get here? It all began back in January, when Tesla warned investors of notably slower sales growth, fueling concerns about both demand for its vehicles and increasing competition from China. Musk responded by indicating that Tesla would shift focus toward the production of its new generation of vehicles. That day, Tesla's stock suffered its sharpest percentage drop in over a year, wiping out $80 billion in market value in a single day, an unprecedented loss for the company. The road ahead for Tesla seems far from smooth, from the company canceling plans to build a new factory in Mexico, to the struggles of Ford and General Motors, GM. With their EV sales, it's clear that the electric vehicle, EV market is facing some serious challenges. In this video, we'll dive into the steep insurance costs, the dangers of EV fires, and the looming supply chain issues driven by China's dominance in battery materials. The big question remains: is the EV dream losing its shine? Are governments pushing too hard, too fast? And is the market truly ready for such a massive shift? But first, make sure to show your support by liking this video and subscribing to Tesla Stock News for more updates. Let's get started. The EV market is facing a turbulent time. A shocking new report has surfaced, revealing that the electric vehicle industry is undergoing a severe downturn. Car manufacturers are struggling to sell EVs, leading to billions of dollars in losses. This report uncovers some alarming reasons why EVs might not be the future everyone was hoping for, and it highlights three critical flaws that have caused Tesla's stock to plummet by a staggering $80 billion in just 1 week. So what's behind this report? Are there secrets being hidden by political leaders? Could it be that EVs are more of a scam than a solution? If you thought the push for EVs was solely driven by automakers, get ready to hear about some disturbing failures that have emerged. The story begins in mid-2023, when EV sales were on the rise as more brands rolled out their electric models. However, the reality began to set in when longtime EV owners began sharing their horror stories, exposing the true challenges of owning these vehicles. Recently, Consumer Reports dropped a bombshell, revealing several issues with EVs, including problems with Tesla and other manufacturers, showing that EVs might not be as safe as they were advertised to be. Stay tuned as we dive deeper into these issues. Meanwhile, some leading economists are sounding the alarm, suggesting that the EV market could be heading toward a massive disaster. One such sign is a growing number of EVs parked outside a boarded-up movie theater in Arizona, raising questions about the state of the EV industry. Steve Nelson, an industry analyst, says the EV market as a whole has slowed down in 2024, and these overflow lots could be a sign of the struggles the industry is facing. At Clay with EV Access, a rental business based in Phoenix, they rent out hundreds of electric vehicles, mostly Teslas. Nelson points out that while their business is doing well, other rental services like Hertz are now selling off their Tesla fleets. Outside the Scottsdale movie theater, nearly 250 Teslas, including some Cybertrucks, are parked, with many still wrapped in plastic. Industry analyst Carl Brower from iSeeCars.com says these overflow lots are a clear indication of slow demand. He believes that with so many brand new Teslas sitting unsold, it's apparent that the company is struggling to find buyers. Tesla has not responded to questions about these overflow lots, but it's clear that the industry as a whole is facing difficulties in 2024, despite the government's tempting $7,500 tax credit. More and more people are seeing through the facade of the EV hype and are turning their backs on electric vehicles. Even major players like Ford and GM are feeling the pressure. Ford's EV division lost over $1 billion in just 1 quarter, forcing them to scale back their investments. GM isn't faring much better either, with their EV efforts eating into their profits as well. Then there's California, a state that has long been at the forefront of the EV revolution, promising to phase out gasoline-powered cars by 2035. But here's the twist. Tesla sales in California saw a 10% decline in the last quarter of 2023. This is significant because Tesla has long been the poster child for the EV movement, and California has been its biggest market. What's happening here? The reasons are piling up. Public charging infrastructure remains a mess. The prices of these sleek electric vehicles are sky high, and government incentives are becoming unclear. To make matters worse, Elon Musk has made some controversial statements recently, even predicting that China could soon dominate the EV market. But before diving into that, let's take a closer look at the current state of EV sales. Ford and GM combined lost $5 billion on their EV divisions in just 1 year, meaning they sold each EV at a $36,000 loss. Tesla, once a highly profitable brand, had to introduce 7 price cuts in a single year just to stay competitive. The bottom line is that while people are still interested in EVs, they're not willing to pay exorbitant prices. Right now, the Biden administration's reliance on China for 80% of the EV supply is driving up production costs and creating a risky dependency on a foreign country. At the start of 2023, EV sales were soaring, but suddenly, they took a nosedive. Interest rates have risen, making these electric vehicles even more expensive to own. Consumers are beginning to look back at hybrids and traditional gas-powered cars. Even Toyota's CEO has voiced his concerns about EVs, betting big on hybrids and hydrogen fuel. And it's not just happening in the US. EV sales are also dropping in Germany, despite the European Union's planned ban on gasoline cars after 2035. As a result, companies like Ford, Toyota, GM, and even Tesla are rethinking their EV strategies. Tesla recently called off plans to build a new EV factory in Mexico, signaling a shift in the market. GM has also delayed the production of its electric pickups and discontinued its most affordable EV, the Chevy Bolt. Meanwhile, Ford has halted F-150 Lightning production due to disappointing sales figures. The F-150, a longtime leader in the market, isn't performing as expected. Convincing loyal customers to switch to electric vehicles is proving to be more difficult than anticipated. The issues go beyond just sales figures. From range anxiety to buggy software, there's a long list of challenges that could hinder the widespread adoption of EVs. One major concern is the lack of charging stations, which is akin to owning a phone with no place to charge it. Initially, the success of EVs seemed to ride on a wave of government incentives and regulations, but as those incentives fade out, so too does the public's interest in EVs. In countries like Germany and France, where government perks for EVs have been reduced, sales have taken a noticeable hit. In the US, fewer cars are now eligible for the coveted tax break, further dampening enthusiasm. Let's dive deeper into the dangers exposed by the latest report, which has caused Tesla's stock to drop by billions in just a matter of days. Imagine being excited about these sleek, silent EVs, only to find out that they might cause more headaches than traditional gas-powered cars. According to the report, a staggering 80% of EV owners would never consider buying another one. This conclusion is based on a survey of 330,000 vehicles, revealing a host of issues from engine problems to electric motor malfunctions, leaky systems, and infotainment glitches that never seem to work as intended. The report points to 2 primary culprits: traditional car manufacturers, who are still figuring out the intricacies of EV technology, and newcomers like Rivian, who are still navigating the complexities of car manufacturing. He says if everyone is stumbling in the dark, trying to assemble these electric puzzles without losing any pieces. At the top of the list of problems are electric drive motors, charging issues, and of course, the batteries themselves. But the charging issues aren't just about finding a plug. They also involve cars refusing to charge in cold weather, with their batteries losing up to 40% of their power. These problems are hitting EVs hard, causing them to lose resale value faster than any other type of car. For instance, a Tesla Model X could lose $21,000 in value in just 1 year, according to Tesla's own app. Now, here's where things get even more interesting. It turns out that EVs might not be the green superheroes they were thought to be. These vehicles consume massive amounts of electricity, often sourced from less than clean energy, and they require rare earth minerals that come from environmentally damaging practices. And then there's the issue of recycling these high-tech batteries. Tossing them into the ocean isn't an option, and the process is far from straightforward. The situation gets even more complicated when considering America's long-standing love affair with gas guzzlers. Despite Ford and GM investing heavily in electrifying iconic models like the F-150 Lightning and the Silverado, consumers aren't rushing to make the switch. Over 3,000 auto dealers are pushing back, essentially telling the Biden administration to ease off on the EV push. But the challenges don't end there. Owning an EV has become a financial nightmare. Premiums for insurance are soaring, with some cars seeing premiums as high as $6,000 a year. The cost of repairs and parts is through the roof, and those ticking time bombs known as EV batteries aren't helping matters. It's no wonder insurance companies are hesitant to jump on board.